Warren Buffett became one of the most successful investors in history by following his 7 famous financial rules. Want to know which rule we're talking about? 99% of people aren't familiar with Warren Buffett's strategy, and it's quite likely you aren't either. But don't worry, you're in the right video, with the right mindset to start becoming part of that 1% of the population capable of managing their finances as effectively as possible. Warren Buffett is one of the 6 wealthiest men in the world. Currently, he has an estimated fortune of over $100 billion. But it wasn't always like this. Like many, Buffett started from scratch, investing his money wisely and following principles that allowed him to multiply his wealth year after year. Buffett is considered by many investors as a sort of demigod in the world of finance. The famous American entrepreneur is the largest shareholder and CEO of Berkshire Hathaway, which has a market capitalization of over $700 billion. At 11, while most of us were thinking about playing video games, hanging out at the park with friends, or staying home pursuing hobbies, the last thing on our minds was our personal finances in the future. But now, imagine being the son of a stockbroker in Omaha, Nebraska, and buying your first stock for $38. Thanks to his father, Warren dove into the world of finance and global economies. But one day, the stock price he bought dropped to $7. For a child, this would be tragic, but for Warren, it was a waiting game. He waited until the stock rose to $40 and immediately sold it. An average teenager would probably have sold at a loss and been upset, thinking that investing in stocks is a scam. Here we can see the enormous importance of psychology and financial mindset, where it's vital to set emotions aside. Buffett's secret was that even when his stocks reached $20,000 year after year, he learned the importance of the difference between value and price, and of course, the importance of patience for optimal results. These are some of the secrets that led him to become one of the most influential millionaires in the world. In 1956, Warren Buffett founded his own company with 7 partners, including family and friends, with an initial investment of $105,100. The funniest part is that only $100 was Warren's. In 1961, Buffett Associates made its first major purchase, the Dempster Mill Agricultural Products Company, which brought him problems he couldn't solve alone. To resolve all the conflicts, he reached out to Charlie Munger, who brought order to the company. In 1963, he sold the company, gaining a capital of $2.3 million, considering that the previous year he already had a capital of $7.2 million, growing in every sense along with 90 partners nationwide. With Charlie Munger, they created a super interesting philosophy, finding wonderful companies at a fair price rather than fair companies at a wonderful price. A true genius. Now you understand why he is considered a demigod in the world of finance. Rules to become a millionaire, according to Warren Buffett. Reinvest your profits. Warren Buffett advocates for reinvesting your profits as a method to stimulate long-term growth. This approach is based on the idea that by reinvesting profits earned, it's possible to generate greater returns in the future, as each reinvested profit contributes to compounded growth. Avoid unnecessary debt. Buffett's warning about unnecessary debt is based on the importance of unlocking the potential of your capital by avoiding unnecessary loans and credit cards. Minimizing financial risks and maintaining greater control over resources is essential to prevent situations where debts may become a burden that limits investment opportunities or personal progress. Seek to live more simply. The recommendation to live simply aims to create financial room for savings and investment. Despite his considerable fortune, Buffett continues to live modestly. This philosophy highlights how minimizing frivolous spending can create opportunities to accumulate capital, which can then be directed towards more significant investments, thus contributing to wealth building over time. Never invest in something you don't understand. The importance of financial education is emphasized by Buffett. He stresses the need to fully understand any investment before committing to it. Avoiding investments that are not understood helps mitigate risks and make informed decisions, underscoring the importance of having a deep understanding of the business model and growth prospects before investing. Always invest for the long term. Buffett advocates for a long-term approach to investing, recognizing that true benefits often materialize over time. His famous metaphor about sitting in the shade of a tree you planted long ago underscores the importance of patience and resilience to short-term volatility. This strategic approach allows investors to overcome market fluctuations and achieve more solid results over the years. When investing, pessimism is your friend and euphoria your enemy. Buffett warns against being carried away by extreme emotions in the world of investments. He suggests that pessimism or caution can be beneficial when assessing opportunities, while excessive euphoria can lead to impulsive and risky decisions. This advice highlights the importance of maintaining a balanced and objective perspective, based on rational analysis rather than emotional market fluctuations. You can't make a good deal with a bad person. Buffett's recommendation to surround yourself with successful people underscores the importance of integrity in business. Choosing partners whose behavior is exemplary establishes solid foundations for successful collaborations. Integrity and ethics are crucial considerations for Buffett, who emphasizes that the quality of people involved in a business can significantly influence its long-term success. These are Warren Buffett's 7 main financial rules, but for those of you who have watched this far, I've brought a few more bonus ones for you. I hope you enjoy. Financial education. Warren Buffett asserts that financial education is the key to everything, and the most valuable investment is the one you make in yourself. The day I decided to invest in my financial education was the day my wallet started smiling. Becoming a millionaire isn't an easy path that happens overnight unless you win the lottery. And even then, it's the opportunity many wait for to start a business. What you invest in your physical, mental, and emotional health will last a lifetime. But if you don't invest in yourself, how will you reach your goals? You only have one mind and one body, and they need to last a lifetime. But if you don't take care of that mind and body, they'll be a disaster 40 years from now. Buffett is absolutely right. This is the first step to having a healthy financial education. Financial planning, the roadmap to success. Ever tried going on vacation without a plan? I have, and it's a disaster. And if you've tried it too, you surely understand. The same goes for your personal finances. If you spend without a plan, things tend to go very wrong. Warren Buffett's approach teaches us to plan for the long term without going crazy in the present. Smart saving. In a speech to college students, Buffett said this is a crucial key. As basic as it may seem, one of the biggest mistakes we make, since we're young, is not knowing how to save and spend wisely. It's not just about saving, but also about investing. He says saving is like growing a tree, but investing is like planting a forest that, in the long run, will allow us to reap economic rewards. Buffett mentions that patience is the most important virtue in this field. If you're not willing to hold on to an investment for 10 years, then you shouldn't think about having it for 10 minutes. This wise concept has taken him where he is. Smart diversification. Don't put all your eggs in one basket. Buffett didn't bet everything on one card, and neither should you. Unlike many millionaires, Buffett never bet on the risky without knowing if it would work, at least not more than once. One of his philosophies is, rule number 1, never lose money. Rule number 2, never forget rule number 1. Something very wise that truly changes your perspective on becoming a true millionaire. Those are the 7 rules you need to become rich, according to Master Warren Buffett. Thank you very much for watching this video this far. Use and abuse Buffett's knowledge to achieve your financial goals. If you're new here on our channel, subscribe and enjoy all our content. See you in the next video.